Welcome everyone to our daily Forex market analysis in preparation for trading on July 20th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. And if you have any questions about your individual investment needs, I recommend you talk to your investment advisor. So tomorrow, on Thursday, we have two main things coming up. We have a lot of central bank activity. So this whole month has been, or last couple months have been all about central banks, and coming up we have two central banks. So before that, we had positive data out of the US, so US dollar got a little bit of a boost today. But then coming up, we have employment numbers from Australia, which will be important. But the big thing here is the monetary policy statement from Bank of Japan. So that will be very big, and Bank of Japan is one of the few banks that actually is not hawkish. So this means it will be, if they say they're going to maintain their current monetary policy, which is basically they are in expansionary monetary policy, so they're providing stimulus into the economy. So if they maintain that, it will be bad for Japanese yen. So the different crosses may go up against or they're very likely to go up against the Japanese yen, because the other central banks are changing their tone. They're turning from loose monetary policy to now tightening the monetary policy and interest rates. So they're turning hawkish, and if Bank of Japan stays dovish, then there will be a big disparity between the central bank stance, and that will be negative for Japanese yen, which means all pairs will go up against that. So that's just the fundamental theme. So we don't know when it's going to come up, but it'll be sometime during the Asian session right now. So we'll see. And at 2:30, there is the Bank of Japan press conference. This is where, of course, there will be more follow-up on the monetary policy. So this will be important. And then going into our Thursday, we have retail sales number for British pound. Of course, that will be important. But the biggest thing here is the ECB. So this is European Central Bank minimum bid rate, which is an interest rate. They're not expected to change that. However, so whereas Fed and Bank of Canada, they are talking about raising, or they have already raised rates, where the European Central Bank is actually talking about cutting back on the stimulus. So it's the two sides when they do monetary policy. So there's the monetary policy, how much they're putting in, and the other one is interest rates. So these guys are talking more about cutting back on their asset purchase program, which is basically they are putting less money into the economy, which will make euro go up. So either way, if they stay with that, and that's what Draghi has been saying in the last few meetings. So if it's the same tone, and they're basically, that's what they're going to start doing, then that will be positive for the euro, and we're likely to see euro go up. So those are the key events. So two big central bank events. If you're trading the London session, definitely look for volatility. So just be careful with that one. So let's move on to the charts here. We'll start off with euro US dollar. So euro did pull back today, but that may just have been profit taking ahead of the central bank ECB tomorrow, and now we have seen it jump up. So basically, this I am going to say neutral to bullish on this one, because one, it's holding from the technical perspective, it's holding above this 1.1492, which is about 1.1500, let's say 1500 level. So this still looks bullish. So every time it's pulled back, it's gone up higher. So it's still up there, which makes it bullish. But because of the ECB, this can go either way. So just be careful with that one. So here is our level, 1500. Again, we were looking for, even today, I was looking for a pullback all the way in here. The first pullback level was this one right here, and it came into that, but hasn't pulled back into this S1 level here. So we'll see if it does. And another option is that, because the market may be expecting ECB to come in as positive, and ahead of the ECB announcement, we may see market do that push up. If the news comes up negative, if they're not looking to cut back on their asset purchase program, that will be negative for the euro, and that's when it will be a bigger upset and we may see the euro drop. So just keep those things in mind. So here we are. Right now, it's as long as it holds above this 1.1490-ish level, it's still bullish. Okay, pound US dollar. So pound is kind of trading sideways now. The daily close is bearish, but it hasn't broken the low yet. So this would be bearish to neutral. The next target would be 1.2980, this level to the downside here. So in this case, we may see the price go and do a test of the same level here like this, and then see a drop. So euro, just like the euro, with ECB, pound may get impacted as well, just because they are positively correlated. And if ECB, let's say, they talk about Brexit or they mention something about it, pound may get impacted. So this is when it's negative, right? So if euro drops, let's say the bank is, because the central bank is negative, we may see this go down with it, especially if there's mention of Brexit. However, if ECB talks about cutting back the asset purchase program, this is likely to go up as well. So for now, we're going to trade this as a bit of a range. So we're looking for 130.50 as the upside. So if this level breaks, then we could see price go up, pull back, and then do another leg higher. We could see one of those moves. But my first instinct will be to look for a potential selling at 130.50, but not into the central bank. And in this case, I'm looking for price to come into 129.80. And at that point, we may just see a push back up here. So that's the range between 130.50 to the upside, 129.80 to the downside. So not a huge range. And once it clears on either side of that, so if it breaks to the downside, then we're looking for this move here into the next target of 129.35. If it goes above that, then we're looking for a pullback, and we're looking for that. So it's a narrow range, and we're really just looking for a break of the range to the either side to see where it wants to go, because it did go all the way up here and then it dropped. So right now the next target will be 129.80 and then 129.35 to the downside. Again, this here 130.50 has kind of held the price in check. So very, very small move today. So we'll see if it will hold it again. Here we go. As we can see, that's a tiny move. 41 pip move on the whole day for a pound. That's a very small move. So okay, so we'll monitor that, and for now we are going to trade this as a range bound. Aussie dollar has been very bullish. Here we are with our Aussie daily. It has broken above that level. We were watching 129.50-ish level, this previous pin, and now this is looking quite bullish here. So let's go to, we need to squish a little bit here because we are way off here. Okay, the next target is 80.20, this right here. So that's a target that we will keep here. Bullish, very, very bullish here, and looking for a further move to the upside. Now, only upset here would be the employment numbers. If they come out negative, that this could turn negative. So do keep that in mind, because we have had such a big move here. The negative numbers will have an impact and we may see it come down. But for now, it is looking very bullish. It has finally, so today, not much, there wasn't much of a move. So it has finally broken above here, this level here. So it went sideways, and then now it has broken above, and this looks bullish at the moment. So here's our 1 hour. As we can see, broke above, pulled back, and now it's going higher. So very bullish here. As we can see, I was marking up my charts here. So let me see if I have, yeah. Okay, so I do have clean chart right here. So this is our, please ignore my trying to show the trade setup here, what it looks like. But okay, so here we are into that into that high that it hasn't been able to break. So looking at this one here, so even though body is green, it still looks like a pin bar. And we'll really need to see what happens here. 73.70 level, if it does not hold below this, or sorry, if it does not break above this, we could see price do one of these. So I'd be keeping an eye on 73.70 level and see what happens at that point. So here we are. As we can see, it has tested this level multiple times. So even if we were to zoom out right here as well, so it has tested this multiple times. And now if it tests it and breaks down, then we're looking for a move back down. So the first target in this case will be about maybe about here, which is 7,300. And then the second target, we are looking at 7260 level. And then of course, third target, 7,200. Overall though, for based on daily, we need to see a clear break above the 73.70 level, because this level has come into play many times. So at this point, it's either going to break through or it's going to turn back down. One thing that I am noticing about this is that it is kind of holding into the high. So it's staying right up there, see, above these levels. So even the close wasn't, the reason I wouldn't just take this trade short right now is because the close is above here as well. So I don't like the close being above these pins. What I would have liked to see would have been a nice close below this level, and then we could into the high, we could look for a potential trade. So right now, not the best time to take this trade, but to the upside, let's take a look at some targets. The next target to the upside, once we do see a break of this, would be to go, so we're looking for one of these moves here, 47.80, oh, sorry, 74.80 level will be the next target to the upside, right into this high. So we do need to see a break. And if it doesn't break, if it just does a stop run and turns around, then we are going to look for a short setup there. So then we need to just watch the 73.70 level basically. Dollar CAD still looking bearish. It has slowed down a bit because it has not been breaking the levels like it was before, but this still looks bearish. It's holding this 126.50 level that we were talking about. It pulled back into that. It's holding this. So with this one, we need to see a break of the 75.80 level once it breaks to the downside. So this is bearish at this moment, right? There's nothing that's a very clearly bearish candle. So really, we're just looking for price to kind of come back into this 125.20 area or 125.100 level. So very, very, it looks bearish at the moment. It's kind of staying just above here, but looks like it could break down. It is making lower highs. So this actually is a trade that we may want to consider right now. But we do have employment numbers with Aussie. So what happens is when Aussie starts moving up, this starts moving lower. And if employment numbers don't come out as expected, this could turn around with Aussie. So that's the only word of caution. So let's take a look at when our Aussie numbers are coming out again. 9:30. So it is 8:30 right now, so in about an hour. However, I do like this trade because it is holding below the pivot point. It's kind of holding its, see, it's making lower highs. It's holding past this previous. So if you look at it here, it's holding past this previous resistance level here. And now it looks like it wants to make another run to the downside. So 125, so 125.80 is the first target, and then further targets to the downside that we looked at was 125.20 will be the next target to the downside. Euro Swiss here, Euro Swiss daily was bearish. But again, any of the euro crosses are likely to turn volatile now because we have because we have the ECB coming up. So this is bearish, but this we are into very strong support. As we can see, price had reacted twice at this level. So at this point, the pullback level will be this one here, 1.10, even maybe 20. So 1020 is the 1.1020 will be the pullback level, and then we're looking for price to do one of these and come back and test this level. So this is just based on the technicals. However, fundamentals will play a big role in this one. So that's something to keep in mind. So the next target to the downside is this one right here. So 109.62. Okay. Or let's say 109.50, sorry. So 109.50 will be the next target to the downside. This looks bearish at the moment, and 1.1020 will be the pullback level. So I'm just going to put this in white, so when we look at it tomorrow, we know that's a pullback level, and target is 109.80 and then 109.50 to the downside. Euro yen, like we had talked about yesterday, yen, I had mentioned when closer we get to Bank of Japan, the more volatile Japanese yen will become, and also euro, the closer we get to ECB, the more volatile it will become. And with this one, the euro will be more positive and Japanese yen will be more bearish. So that is the relationship here. So based on today's close, it was a bearish close. However, we are into support here. We have not broken this support multiple times. So based on the daily close, we are still bearish. The next target is to the downside, 128. The only thing I would say here would be that we may have a surprise as a result of the central bank. So fundamentals will play a role. So we had this quick inefficient move, then all day price just went sideways, and so I'm out of this trade because it didn't really go anywhere, and now price is going sideways. So I'm just going to sit aside and watch this. So this level here, 12900, I like this level. We'll watch it, but I'm more of the thought of just kind of leaving it alone for now, and we'll worry about it after the news here. This Euro Swiss franc, very neutral candle. Doesn't look like there's much to trade there, so we'll just kind of keep our options open. This is pound yen daily. Pound yen is also, it has a bearish close, but it's bearish to neutral because the wick on this is as long as the candle body. So again, with the Bank of Japan coming up, this is probably not the best pair to trade till we see what direction Bank of Japan wants to go, and then we may get an opportunity to buy this. But right now it has been in this range for quite some time, so it came down to test the bottom. Unless it breaks the bottom, it may come down, test it again, and then go back towards the middle of the range here. Let's take a look at dollar Swiss. Dollar Swiss kind of going sideways here as well. Is still holding there. So it's been a really small move, or all moves today were very, very small moves. Nothing happened at all during the day. So as long as price holds below this 95.60-ish level, we're looking for further move to the downside in this one. Keep in mind, we are heading into some big support levels. That will be next. So dollar Swiss franc right now looks bearish as long as it stays below 95.60 level, and the next target for that is 9,500 will be the next target to the downside. Dollar yen, same thing. We had a nice drop here, and then it's just gone sideways. And at this point, based on the close here, this shows rejection. But again, US dollar is not the strongest currency there either. But if Bank of Japan is worse, this is likely to go up. So, but based on the daily candle, I'm not a big fan of trading this pair at the moment. So it is holding the level and looks like it wants to push lower. So if it stays below the pivot point, just like the euro yen, if it stays below the pivot point, we are looking for a further move to the downside. And in that case, the target would be the bottom here, 111.50, which is also our S1 level. So against the weak dollar, we may see dollar yen go down, but we are going to have a lot of central bank stuff. This one here, Euro Aussie, I still like. We have been in this trade, I've been in this trade for a while. Is anybody else in this trade with me? Or is everyone else out? The target is 144.50 was the second target. Out, okay. So yeah, so the first target that we had was higher, and now we are sort of very, very nice close on the day. It did go sideways just like everything else, but this one I am looking for a further move to the downside. And we do have to be cautious here. If the employment numbers come negative for Aussie, this could turn around fairly quickly. And going into ECB, I am likely to close this trade. It's very close to the profit target right now. So I'm likely, once it hits, I'm not going to move the targets. I think I'm just going to close it out. But this still looks bearish from our technical analysis standpoint. So the next target here would be 1.4350. But again, there could be an upset either because of euro or because of Aussie. So again, please be careful with this one. So we'll just mark for now, this is bearish. So I think that kind of covers everything. Any questions or anything else to add? Walter, are you in dollar CAD or FAS? You guys like to trade dollar CAD? Took profit already. Okay. Yeah, it's been, yeah, I know you were shorting it. You've been shorting it all the time, or all this while we've been going down. Okay, perfect. So right now I'm just in that Euro Aussie trade. I don't like, so I may not send out a trade alert tonight. We have had a good week because I don't like the whole central bank stuff and too much. There's too much risk right now. There's a risk of volatility. So as a result, I think I'll just kind of sit it out for now, and then we'll take a look at it after, once the central bank stuff is all said and done tomorrow morning. So we'll reevaluate it then, but I am happy with the trades this week. Yeah, so Walter is saying he's going to put a pending order for a surprise rate. Yeah, so that's something that maybe we should talk about that this Friday in our members only webinar, doing some pending orders, because so where is the upset? So pending orders work really well with the news. So if you were to trade the news, pending orders work when there's a big upset, right? So let's say Bank of Japan comes and says, we're going to raise rates, or we're going to cut back on the monetary policy. That would be an upset. In that case, Japanese yen will strengthen, which means all the crosses, Japanese yen crosses, are likely to drop. So that is a big upset. So that would be a surprise. There could be a pending order there, or the go-to scenario would be they would say we'll maintain an easy policy, and in that case, all the yen crosses will go up. So there could be like a trade there as well on the other side. And then euro as well, euro dollar, and euro yen will probably be the biggest disparity between the central banks. So we could take a look at that. All right, you guys, so we'll call it a wrap for now. I will see you all tomorrow.